We've got the markets really looking a bit lackluster today. So we had the JSE opening slightly positive, into the red, into the green, back in the red again as we head into the afternoon, and really very directionless.
Yeah, directionless at the moment, but I think everybody's holding their breath for the Nonfarm payroll data that's coming out later on today at 2:30, as well as the employment data that's coming out of the States today. As well as, we know that the IMF World Bank Summit is on at the moment, where the G24 countries are sitting to discuss the currency issues that seems to be plaguing the markets of late. And, I think just a whole lot of information coming into the market. And players just really on the sidelines waiting for the key non-farm payroll data coming first.
Well, let's perhaps start with that non-farm payroll data, because of course we had weekly initial jobless claims yesterday falling by 11,000, so a little bit better than expected. But that followed a negative ADP private sector jobs report on Wednesday, so I suppose it's really anybody's guess how the non-farm payroll numbers are going to come out.
Yes, I think, if you look at where the US futures are trading at the moment, they're trading low. So I think the expectation there is very cautious and, just trading a little bit lower there, not sure where that data will be coming out, because it is for the whole of September as opposed to the initial jobless claims data that are weekly, so it would be a better picture, a better gauge as to where the employment is sitting in the United States. You must remember that, the recovery is so underpinned by the employment numbers in the United States, because that, as far as we've seen improvements in other sectors, employment is still lagging quite substantially, and the United States consumer accounts for about 70% of the GDP in the United States. So if they don't have jobs, this any kind of recovery will not be long-lived.
Of course, there has been some talk that, yes, the QE2, the quantitative easing second round from the United States, could be a little bit less than expected, but really I suppose that would depend on the sort of economic data we're seeing coming out. So if we get a worse than expected number, this is really going to boost the case for more QE2, isn't it?
Yeah, it may boost the case, but I think, look, initially maybe the knee-jerk reaction is that if there's no more quantitative easing out of the States, we'll see some pullbacks in the, across the asset classes. But that also goes to show that there is really an improvement. It actually is good news further down the line, because it shows that there's an improvement in the economy. The economy is becoming more robust, if they don't need further quantitative easing. But I think those kind of measures will also be discussed in the summit that is happening this weekend.
In Ntombenhle, we had results out from Alcoa after the bell last night. So the first of the big US companies, if you exclude Yum Foods, which was out the previous day. Alcoa kicking off the earnings season, and the profits appear to be better than expected, because we had that share price going up 3% in extended trade.
Yes, I think it is a very nice kickoff there from Alcoa. And, just generally we're expecting, I think the general consensus is that the S&P 500 is expected to increase earnings year on year by about 23%. So, in quarter three. So, high expectations for these quarterly results, that have been kicked off. But, today nothing major coming out in terms of corporate earnings. So obviously economic data will take center stage. And then next week going forward, I think more focus will be on the corporate earnings and whether they live up to the 23% increase expectation.
Well, you talked about that IMF and World Bank meeting this weekend, of course, the autumn meetings. And we already had our finance minister, Praveen Gordhan, this morning being quoted as saying that the rand is too strong, which is no big surprise. And I think everybody's going into that meeting with the same message.
Yes, they are, especially emerging markets. They're struggling the most because, in lower interest rate environments in the rest of the world, investors look for high yield pickups and they come into emerging markets, and that poses problems as far as our assets are concerned. And then there's also the potential, new coined term of the currency wars that may be happening in the developed economies, where they want the yuan perhaps to be revalued and increase there, and the developers saying, okay, let's not get into a currency war, but their actions may be proving otherwise to what their statements are.
Of course, we had the rand yesterday trading down to 6.83 against the dollar. It's retraced about 10 cents to about 6.93. But really, this is a dollar story, and we've seen that in the gold price as well, because that's come off sharply from those new all-time highs hit yesterday.
Yeah, seemingly the dollar has come back fighting, but I think it's also we're seeing a little bit of risk aversion coming back into the market. As far as seeing currencies, even the euro pulled back a little bit, as well as commodities pulling back a little bit. So the dollar coming back fighting. But depending on what happens with the non-farm payroll data today, we may see some further weakening there in the dollar price and some more support perhaps in our rand price.
Well, despite that slight pullback on the oil share, we have some of the big resources companies, like your BHP Billitons and Harmonies, doing quite well today.
Yeah, they're holding up a little bit, but I must say, commodities have pulled back. It's been a golden week this week where it reached 1,364 was its highest intraday trading level. But yes, we did expect a pullback. So we've seen, oil pull back, gold pull back, and platinum pull back a little bit. And we've seen that perhaps the resource counters, so far today are the only ones winning at the moment.
One of the losers today, SABmiller, a short while ago was down by about 0.5%. Of course, it did gain well over 1% yesterday on the back of rumours that it was in talks to buy Castel Group, which is a French drinks company.
Yes, I think, it was based, I think Castel came out this morning saying that it was based off a bank report that had come out earlier in the week saying that should SABmiller be looking to get into merger and acquisition activity, then Castel would be their best bet and their best move forward. And then I think the market reacted thinking that that was something that was truly going to happen rather than them going to Australia and looking for opportunities there. But I think, it has come back a little bit. Perhaps it will be something that will be re-looked at in the future because SABC does have a right or have an interest in there. They have had synergies with Castel since 2001. So I think, for now they're not selling, nothing is happening, and that was just a market rumor that is now being corrected.